make that. I'm in my own lane. I get to that breeze. I don't fuck with rats, but I get to that cheese. Shorty make it.
Let's just get into this video. So what I trade is, so firstly I'm gonna just talk to you about the model I trade. As you can see, I caught this beautiful trade today. What was it? A 1 to 4.8. I was gonna hold all the way down here, and if I hold all the way down here, I would have passed my 10k funded, and I would have been able to get my payout on my 5k, because I was in a bit of drawdown. But what I did end up doing is I just closed here, because at that point I was at a 1 to 4.8. I was already break even on my 5k, because I was in drawdown on my 5k, about £125. So this trade brought it back up to break even. And after this, so let me just talk to you about this trade before I get into my whole strategy. Actually, no, I should probably talk about my strategy first. So the strategy I actually trade, why is my charts are lagging a bit. So the strategy I actually trade is turtle soup on NQ and on S&P. So firstly, going into the day, what I did check for is, before I go into any day, before I start trading, I go to the 4-hour chart. Okay, check for any imbalances, any sweeps of liquidity that I missed in Asian session, so anything, and in London session. Okay, so alright, let's begin. So going into the day, I don't have I wish I could go back in time. So going into the day, I was looking on NQ. If the chart is gonna, hurry up. I was looking at NQ and and what I saw was we were bearish. So going into the day, I was kind of looking for shorts. So I had in the back of my mind that I was looking for shorts today, because of, as I go into S&P, now I'm going to talk about the reason I decided to take it on S&P. So because I trade turtle soup, what I wanted to see was, so I come on the charts around 9 o'clock. The time I like to take a trade is from 9:30 to preferably 10:30. Okay, so that's the time window I look for taking trades in. Now, going into the day, resting liquidity here, and the same on NQ. Okay, so you had liquidity here and liquidity here. Now what I wanted to see, and I think this was because of news as well, so there was news at 8:30 today, created a high. Now normally after news, and news is finished, market likes, if it leaves a large wick like this, if market decides to leave a large wick like this, normally market decides to fill in this wick, kind of fill in this this space here, this imbalance, if you want to call it. So what I wanted to see was, when it got to when I realized that market came up to here, what I wanted to see was, I waited for, was a SMT, which is, so if you guys don't know what SMT is, a SMT is basically when two currency pairs are the same. So you have NQ, S&P, and Dow. No, not Dow. NQ, S&P, and DXY. These three pairs move similarly. Not exactly the same, but similar. So a SMT would be, for example, here, which I caught today. On S&P, let me go to a higher time frame so it's easier for you guys to see. I'm on a 15-minute time frame. S&P, you can see that this one, S&P created a higher high and NASDAQ created a lower low. Now, as you can see, S&P swept this high. S&P swept this high. NASDAQ didn't sweep this high. So this is a SMT. So because NASDAQ didn't sweep this high, but S&P did, a SMT formed. Now, SMTs are good because, for example, this is a bearish SMT. And basically that just means that market, if there's a SMT between the two currencies, that means the market is most likely going to reverse in the opposite direction. So for example, this is a bearish SMT. That means market is most likely going to become bearish and start selling off. So now I had that in my mind. I was glad to see that there was a SMT. Let me fix my chart because I don't know what's going on. I'm probably rambling on a bit, but I'm gonna try, I'm getting into the hang of this. This is my first video. So I marked out this SMT, as you can see. And there was a liquidity sweep. That's what you also look for. So you mark highs or you mark lows. There needs to be a liquidity sweep of one of these. If there's not, don't take the trade, okay? So there was a liquidity sweep on S&P of this high. NASDAQ didn't sweep this high. NASDAQ instead came into this imbalance right here, as you can see. So now I saw a bearish SMT form. What I would want to see after this is displacement back to the downside, breaking structure. Now you could say the breaking structure was here, here, not here. So you could say the breaking market structure was here or here. I like to be safe. I want to mark it down here because what I've realized is market likes to, especially on NASDAQ or S&P, market likes to go up, have a large displacement down, so you enter because you think just because the market's had a large displacement to the downside and it's broken structure, therefore it's going to keep going down. That's wrong. That's wrong. Most of the time, what NASDAQ and S&P likes to do is it likes to have large displacement to the downside. People fill their orders, people add their orders for shorts, but then it stop hunts you and it takes out your stop loss here, and then it would reverse. So what I like to look for is a SMT, large displacement to the downside, and nice breaking market structure. After the breaking market structure, market doesn't can't come down too low. It kind of taps into an imbalance here, which it just did perfectly, and reverses. This is what I kind of look for. Now, the reason I took my entry here and not on NASDAQ was because, as you can see, there was a breaking market structure here, but market kept falling, broke this low and kept falling, and it nearly took out my initial TP, because at first I was going to take it on NASDAQ, but it came down too far. Remember what I said earlier? I don't want market to displace too low, because then normally, when it displaces too low, takes out areas of liquidity, it likes to reverse, keep going up. So S&P now, I took it on S&P because I like to take trades off the 50%. If I took the trade here, if I mark out this high and this low, the 50% would be here, right? So I would have my pending order here for a sell. Market will come up to the 50%, tap me in, and then reverse here. And my TP was just going to be this low. However, there was a better entry on S&P because market didn't displace that much to the downside, and I could take a higher RR trade because it wasn't so close to my TP. So what I did was, when it had this last displacement, I was aware that there was a fair value gap here, and market might want to come back up to there. Normally I'd have a tighter stop loss than this, but today I was playing it safe because before this I had 6 losses in a row. Risk management is extremely important. You need risk management. Otherwise, if I was risking 1% on my 5k account, those 6 losses, I would have blown my 5k funded account. I would have blown it. All right. So what I do risk is I risk 0.5% on my 5k account, not 1%, because so I risk £25 per trade. And as you can see, £25 per trade on a 5k account is plenty enough. This 1 to 5 nearly got me £138. So risking £25 per trade is perfectly fine. So here, what I was aware, so I marked out this fair value gap here, this fair value gap here, and when it, so I want to, what I do is I mark out, I get my 50%, I get my Fibonacci tool, mark out from the high to the low, and then as market starts to reverse here, I put my 0% here, and my 100% at the top, and then I wait, and then I place my limit orders at the 50%. But normally I'll place my limit order right here. However, let me just get rid of this. However, I decided not to place my limit order here today, and I decided to place it a little bit higher because I knew that market is most likely going to come into this fair value gap more than the 50%, and even wick, just about wick into this fair value gap. So I placed my limit order a little bit higher than the 50%, which worked out in my favor. So as you can see, tapped me in. I can't lie, I did get a bit scared here. I was trying not to get a 7th loss in a row, but luckily it ended up becoming a wick. Then we have large displacement to the downside. Took out this, closed below this candle, which I was happy about. Then we tapped into this fair value gap. It did wick off a couple times, kept going. I marked out this low because if market decided to sweep this low and then have large displacement to the upside, that means market is going to keep going up. So I marked out this low just in case market decided to sweep this and keep going up, but luckily it didn't. Then we came down. I marked out this 5-minute fair value gap here. Look at this, just a beautiful trade, really. I marked out this 5-minute fair value gap here, and I also marked out these lows. I wanted this fair value gap to get disrespected, which thankfully it did. And then my TP, my initial TP, was actually down here. And if I held it, I would have passed my 10k, and I would have been able to get a payout on my 5k. However, while I was trading, I said to myself, am I chasing the profit, or am I actually trading how the market is moving right now? So what I mean by that is, on the way down, it was showing a lot of resistance. White candles, the white candles are when market is buying, and the black candles are when market's selling for me. Whatever your candles are, I don't know what they would be. So it was showing a lot of resistance on the way down, and I thought as it swept this low, it would reverse. So on my 5k, I decided to close at break even. So I was back up on my 5k now. And on my 10k, I decided to trail my stop loss as it went down. I moved my take profit down here, but my trailed stop loss wicked me out and decided to go and continue to the downside. But this is basically the trade that I went through. I was probably waffling a lot there. I won't lie. You might want to skip it. It was too late now. You already watched it. But yeah, that was the trade. A 1 to 4.8. Ending off the week on a Friday. So yeah, this is pretty good. By no means this is financial advice. I'm pretty new to it myself, as you probably can tell. I can't even describe half of this shit I'm saying. I just know it. So yeah. I hope you guys enjoyed the video. Please like, subscribe. Yeah, man. First video is pretty good. I don't lie. First pretty.